I know that you have been waiting for this video. We have a new infrastructure bond, and as always, I'm here to tell you what it will mean if you invest at the minimum 100,000, 150,000, a million shillings, or even 20 million shillings or above. And so, you know, as always, that every bond has special terms and conditions stipulated in the bond prospectus, this document. Investors, or rather bond investors, are used to long-term bonds with only one redemption date. And the redemption date is when your principal amount is repaid back in full by the Central Bank of Kenya. For example, an 18-year bond issued in 2023, where your principal amount is would be issued in full in 2041. But the June 2023 infrastructure bond has 3 redemption dates, and this is the reason I've been receiving more questions than usual from the Wealth Tribe in my Instagram DMs and via email. The other 3 infrastructure bonds that I talked to you about, the previous 3 infrastructure bonds, had only 2 redemption dates, but this one has 3 redemption dates, and that is exactly why a few of you are confused, and a few of you have been asking me, what does it mean if I invest 100,000 shillings, if I invest 150,000 shillings, if I invest 20 million shillings, whichever amount. I'm going to explain it to you now. As always, again, before you invest, you need to understand 2 terms and conditions, and these conditions are the redemption structure and the amortization. The redemption structure simply answers the question, when will your principal amount be repaid back? When will your principal amount be repaid back? And then the bond amortization is simply the gradual or regular repayment of the principal and the interest of the bond within the period or in the course of its life, or in the course of the life of this bond. It's simply the process of repaying back a debt with regular repayments, because you know that a bond is a debt instrument, right? Yeah, so a bond is simply the government of Kenya borrowing money from us, its citizens. It's called domestic debt. It's simply the government of Kenya borrowing money from us, the citizens, to finance its various projects. Now that you understand the meaning of these 2 conditions, let's look at the specifics of this June 2023 infrastructure bond. The amount that is on offer is 60 billion shillings. The purpose of this bond is for funding of infrastructure projects in the financial year 2022-2023 budget estimates. The tenor or the time period for this bond is it's a 7-year bond. The coupon rate is market determined, and I will explain later what market determined means. The period of sale is from 26th May 2023 to 13th June 2023. So this infrastructure bond is already on sale because it started on 26th May. The value date is 19th June 2023, and the payment date is 19th June 2023. It's the value date and the payment date is the same thing. So simply this is the date by when you're meant to have wired your principal amount or your investment capital to the Central Bank of Kenya. The minimum amount you can invest is 100,000 shillings. We see there we have the interest payment dates, and then the redemption date is 10th June 2030, that is after the 7 years. The taxation reads the bond will be tax-free, as is the case for infrastructure bonds as provided for under the Income Tax Act. And now to the specific reasons why we are having this video. The redemption structure. The redemption structure reads 15th June 2026, 20% of unencumbered outstanding principal amount. 13th December 2027, 30% of unencumbered outstanding principal amount. 10th June 2030, 100% final redemption of all outstanding amounts. On the amortization bit, it reads no partial redemption will be paid on encumbered securities on amortization dates. Any amounts up to 1 million per CDS account amortization will be redeemed in full except for unencumbered securities. Now, It's very important for us to start by understanding what does this jargon unencumbered securities mean. Unencumbered security simply means a bond that has been used as collateral for a loan. Usually you hear this phrase encumbered or unencumbered being used by real estate investors, where they say that a piece of land has encumbrances. When they say that after a land search, it usually means that the said land was used as collateral for a loan, and therefore this land cannot be transferred to a new owner. So what exactly do these terms and conditions, this redemption structure and amortization, mean in layman's language? Basically, in simple terms, what do these terms and conditions mean for you if you invest 100,000 shillings, if you invest 150,000 shillings, if you invest 20 million shillings? Simply, these terms and conditions mean that if you invest 1 million shillings or less, your full principal amount will be paid in 3 years. In a nutshell, this is a 3-year infrastructure bond for anyone who invests 1 million shillings or less. It is a 3-year infrastructure bond if you invest 1 million shillings or less, because your full principal amount, that is your 100,000, your 150,000, your 1 million shillings, will be paid back in full on 15th June 2026, and that is exactly 3 years from now. Let us look at practical examples for those people who will invest between 100,000 to 1 million shillings. If you invest 100,000, then use 20,000 of your bond as collateral for a loan, the 20,000 will be encumbered. If you won't have paid back your loan by 15th June 2026, only the 80,000 will be paid back. The 20,000 will be paid back either in 2027 or during the final redemption date in 2030, depending on when you'll pay the loan. If you invest 1 million shillings, then use 20% of your bond as collateral, the 200,000 will be encumbered. If you won't have paid back your loan by 15th June 2026, only 800,000 will be paid back. The 200,000 will be paid back either in 2027 or during the final redemption date in 2030, depending on when you'll pay back the loan. And as always, every time I give these examples, I always get this question: is receiving your principal amount early a good thing or a bad thing? Is it better to receive your principal amount in 3 years, or is it okay, or is it better for you to receive your principal amount in 7 years? Now, it's a great thing for us retail investors, as small investors who invest between 100,000 to 1 million shillings. Because what will happen is that if you receive your principal amount back earlier, it means that you can either spend that principal amount, or a smart investor would invest that principal amount elsewhere. So that's advantage number one, is that you get your money back earlier. Now, the other advantage number two is that it lowers your inflation risk. You know that the coupon rates or investing in a bond is not inflation adjusted. That means if, for example, this bond gives us a coupon rate of 14.5%, for example, and the inflation rate rises in the next coming months or in the next coming years to 14%, 15%, or even more, it means that we will be stuck with this return of 14.5%, in that it's fixed, and that is why bonds and treasury bills are called fixed income securities, in that there's nothing that will happen. There's no day Central Bank of Kenya will say, oh, now because the inflation rate has risen, let us rise or let us increase your coupon rate. No, we will be stuck with that 14.5%, which is why that means that by investing in bonds, one of the risks that you should be aware of is the inflation risk. Now, the issue here is that the rising interest rates generally, the rising interest rates are a risk to our investments. We usually say that higher interest rates is equals to lower bond prices. In other words, interest rates are expected to rise in line with rising inflation, so investors are wary of the risk rising interest rates pose to the market value of bonds. Rising interest rates affect the market value of bonds, especially bonds with longer maturities. Being able to cash in part of your principal sooner gives you the ability to invest in other high-yielding instruments. Now, what about those of you who will invest more than 1 million shillings? What does this redemption structure and amortization mean if you invest more than 1 million shillings? If you invest more than 1 million shillings, 20% of your principal amount will be paid in 3 years. That is on 15th June 2026. 30% of your unencumbered. It's very important to know that if you use your bond as a collateral, or a part of your bond as collateral, then these redemption dates or these partial redemption dates will not apply to you, right? Or will not exactly apply to you. But let's assume that you invest more than 1 million shillings, let's say 1 million shillings and 50,000. This what I'm about to take you through is how you're going to redeem your principal amount, or how your principal amount is going to be paid back. It's going to be paid back in 3 dates. Number one, 20% will be paid in 3 years, which is on 15th June 2026. That's the first principal. Then the other 30% will be paid in 4 years. That is on 13th December 2027. And then the other 50% will be paid after the 7 years. You know, that will be the final redemption date, which is going to be on 20th June 2030. Of course, if you use 100% of your bond as collateral for a loan, these partial redemptions won't apply to you. And now let us look at practical examples for those people who are going to invest more than 1 million Kenyan shillings. If you invest 1,050,000 and then use 150,000 of your bond as collateral for a loan, the 150,000 will be encumbered. On 15th June 2026, you receive 20% of your unencumbered amount, that is 180,000. On 13th June 2027, you'll receive 30% of your unencumbered principal amount, that is 270,000 shillings. You receive the rest of your principal amount either in 2027 or during the final redemption date on 20th June 2030, depending on when you'll pay back the loan. If you invest 5 million and then use 1 million shillings of your bond as collateral for a loan, the 1 million will be encumbered, and on 15th June 2026, you receive 20% of your unencumbered amount. That is 800,000 shillings. And on 13th December 2027, you receive 30% of your unencumbered principal amount. The 1.2 million, or that is 1.2 million, you receive the rest of your principal amount either in 2027 or during the final redemption date on 10th June 2030, depending on when you'll pay back the loan. Now you know, right? And if you want me to give you the specific amounts you'll get paid on which dates, and depending on which amount of money you will invest, just put it in the comment section and I'll do the calculation for you. Now, I've been receiving other questions. Generally, I receive other questions related to infrastructure bonds, and as always, let me handle a few. Number one, let's start is, what does a market determined coupon rate mean? I like to answer this question using a very practical example. Let's say you live in a place where you have a neighborhood kiosk or a neighborhood shop, and let's say one morning you wake up and you go to the shop and you ask the shopkeeper, how much are you going to sell for me this loaf of bread? And the shopkeeper tells you, I'm going to sell you this loaf of bread for 60 shillings. And then your next door neighbor, your immediate neighbor, goes to the same shop and asks the shopkeeper, how much are you going to sell me this loaf of bread? And then the shopkeeper tells your neighbor, I'm going to sell you this loaf of bread at 65 shillings. And then your that neighbor or your second neighbor goes to the same shop and asks, how much are you going to sell me this loaf of bread? And then the shopkeeper says that I'm going to sell you at 70 shillings. In order to determine what is the price of that loaf of bread, the shopkeeper would have to then sit down, or in order for you to determine what is the average price of that bread, you'd have to sit down and add 60 plus 65 plus 70, the total, and then divide by 3. That would be the average. Literally, what you're saying here is that the piece of this bread, the price of this bread will be determined by the market, by you and your neighbors who are trying to buy this piece of bread. And so it's the same way bonds work when we are told that their market determines. It means that through the auction process, because each of us who are going to be investing in this bond are going to submit a bid. So through this auction process, when we submit bids, that is how we are going to determine what is the coupon rate of this bond. And so we will know when we will know what the coupon rate or what the interest of this, we will know what the coupon rate of this bond is after the sale, the period of sale ends. That is when Central Bank of Kenya will inform us. That's when the Central Bank of Kenya, when the sale period ends on 13th June, that is when the Central Bank of Kenya will inform us what is the coupon rate of this bond. But it is likely the coupon rate of this bond is likely to be higher than the March infrastructure bond. And if you've been watching the Wealth Tribe videos long enough, you know that or if you invested in the March infrastructure bond, you know that they gave us a coupon rate of 14.399%. So for this one, we are expecting to get something like 14.5% or above or thereabout. Of course, I do not know, because as I've said, it is determined by the auction process. Question number 2. If you can't invest now, will the bond be reopened in future? The bond prospectus, that document that has the terms and conditions for this bond, states that the bond may be reopened at a later date. And this is usually at the sole discretion of the Central Bank of Kenya. None of us can predict when and if the bond will be reopened in future and what date. And then, of course, if you miss an opportunity to invest during this sale period, you can always buy the same bond in the secondary market, and the secondary market is the Nairobi Securities Exchange through an approved stockbroker. So by 20th of June 2023, the same bond will begin trading on the Nairobi Securities Exchange. But I have to tell you that it's more expensive to buy the bond on the secondary market than it is to buy the bond on the primary market. And the primary market is the Central Bank of Kenya. The secondary market is the Nairobi Securities Exchange. Question number 3. How do you bid for the infrastructure bond? You need a CDS account domiciled at the Central Bank of Kenya. So basically, and this is not the same CDS account that you use to buy stocks. Yeah, this is not the same CDS account. So as an investor in Kenya, you need 2 types of CDS account. One CDS account that is domiciled at the Central Bank of Kenya that you used to invest in treasury bills and treasury bonds, and another CDS account through an approved stockbroker that you used to invest in publicly listed companies on the Nairobi Securities Exchange, such as Safaricom, Equity, KCB, and all those. And if you already have a CDS account, you simply need to dial *866 hash. Dial *866 hash. This is the CBK, TMD, Treasury Mobile Direct USSD code, and you follow the prompts and submit your bid. Remember that if you do not want your bid to be rejected, when you're asked which coupon rate you're bidding for, please put 0. Please put 0, because after uploading this video, I always get DMs on my Instagram where people are asking me how come my bid was rejected. Most of the time is because when you are asked which coupon rate you want, you said you want 15%, you want 16% and all that, and most of the time what happens is that if you do that, your bid is likely to be rejected. So please bid 0 if you want to be on the safe side, unless you have more than 20 million, which means that you are allowed to submit a competitive bid. If you have more than 20 million, you're allowed to submit a competitive bid, and in this case a competitive bid means that you're allowed to say which coupon rate you have to bid, whichever coupon rate you desire. And of course the Central Bank of Kenya will determine whether to actually give you that coupon rate or not. And so you can also invest in this infrastructure bond through commercial banks, investment companies, licensed investment advisors, through your stockbroker. Yes, you can. But if you do that, if you go through an intermediary, these intermediaries, you'll pay a management fees. Usually these management fees they charge you is usually a portion of your investment capital. And from experience, because I do one-on-one coaching on a daily basis, I have an example of a client who wanted to invest 1.1 million shillings in a treasury bond through a commercial bank, and that bank charged her 86,000 shillings in order for her to invest in this treasury bond or in that treasury bonds back in the day. And so that's why I always say it is a smart investor invest directly through the Central Bank of Kenya, and also a smart investor breaks the chain of going through intermediaries. Yeah. Question number 4, why should you invest in this infrastructure bond? Number 1, passive income. Every 6 months, the interest rate is going to be paid into your bank account. So far, the government of Kenya hasn't defaulted in its payments of either the principal of interest payment. So it's completely passive income. You're earning money while you sleep. Number 2, by investing in bonds in Kenya, we get relatively high returns. For this infrastructure bond, that we are predicting that we're going to get more than 14.399%. Either 14.399% or higher, because the last March infrastructure bond gave us a coupon rate of 14.399%. Infrastructure bonds are tax exempt. So infrastructure bonds are, as I read earlier, they're exempted from withholding tax. Yeah, so, and in this time, as Kenyans, when all of us are waging a war against the finance bill or waging a war against more taxation, you want to take advantage of investment opportunities that do not tax you, right? And then number 4, it's the infrastructure bond is risk-free. It's fully backed by the faith of the government of Kenya. And number 6, by investing in a treasury bond, or by investing in an infrastructure bond or treasury bonds in general, you have access. You can use your bond as collateral for a loan from a commercial bank. Yeah, so owning a real estate property or owning a piece of land is not the only way to have collateral to use for a loan. And then I say it again as a reminder, please bid average if you do not want your bond to be rejected, so that you don't have to come to my email or my Instagram DM to tell me, oh, what happened, how come my bid was rejected. Bid average, unless you have 20 million and above, which means for you are a high net worth individual. You are likely to be a high net worth individual, and therefore you should be able to know that you can submit a competitive bid. As always, if you have more questions about this specific match infrastructure bond, please leave the questions in the comment section. And please note that this video was as short as it is because it was specifically to discuss the match infrastructure bond. If this is the first time you're hearing of this investment, investing in treasury bonds, I will leave a beginner's guide in the description box to help you, set up a CDS account, understand what infrastructure bonds and all the shebang about infrastructure bonds. And as always, please like this video, comment, give it a thumbs up, subscribe to this channel. My name is Agatha from the Wealth Tribe, and this is where we learn how to build wealth together.